Hi, good morning. Thank you for joining us for this morning's session, A New Wave of Leasing Requirements, How to Comply with the New Standards. We know this is going to be a hugely hot topic and a big lift for organizations, regardless of what office you might be supporting in your organization. So we're going to walk a little bit through about how to comply with these standards and really geared towards implementation of them. My name is Melissa Sizemore. I am a partner with Cotton & Company, and I will be your moderator for this morning's session. Joining me today are Donna Sandoval, who is the controller for the city of Albuquerque, and Ed Gramp, who is the acting director of Financial Policy Division for the General Services Administration. So thank you, Ed and Donna, for joining us for today's panel. Now, before we dive into the meat of our discussion today, we wanted to do an initial poll with you all to kind of gauge which standard our audience is going to be implementing. So you can go down to the polling and questions tab under the chat in order to answer this poll. So which of the lease standards will your organization be implementing or have already implemented? Is it going to be A, Topic 842, B, GASB 87, or C, SFAS 54? So we're getting some initial results right now. Lots of GASB 87. All right, so I think this is probably about where we thought we might be with the AGA PDT. We are, recognize that there is a small portion of our audience that is going to be doing the public standards, but mostly related to GASB and FASAB standards. So thank you for answering that question. So as we start talking about these standards, one of the things that we wanted to point out is while they are promulgated by different standard bodies, the impact of each of these standards is really more similar than different. And they have the same major requirements, which is now changing the way that we account for leases. Now, traditionally, leases have been really easy to identify, but that's not really always the case anymore. So in general, under each of these standards, there's now a new definition. Just to kind of give you an overview, it's usually described as a contract or part of a contract that conveys the right to control the use of an identified asset for a period of time in exchange for consideration. So what that actually means now to all of us is any arrangement that has an asset that meets this definition is now considered a right of use asset and is now a lease. So this includes assets that are potentially embedded in service contracts, often referred to as embedded leases. And unless a lease is considered short-term under your particular standard, it's now required to be reported on your balance sheet. So what this means is most organizations that had operating leases that were previously expensed under the standard are now having to gather this information and report it on their balance sheets. And it's, in some cases, very material. So the standards have also updated classifications for leases. So capital leases are a thing of the past. We're eventually going to have to take that out of our vocabulary altogether. And they've added several new reporting requirements. Further, the new standards have also increased the amount of data that's needed to capture and test leases, as well as a significant amount of judgment that's required over how you would test lease for the new capitalization, or whether or not a contract is or doesn't contain a lease. So one thing, for example, is simply capturing lease terms is not enough anymore. We have to be able to analyze the probabilities of renewals and cancellations. And so that's just something that kind of, points to the significant impacts in the way we all have to do our data gathering in order to comply with these standards. Now, while they are significantly similar, there are some differences that we wanted to quickly point out. One of those things is the effective date. So the effective date for each of these standards is different. So depending on which standard you're implementing, you might be at a different point of this process. The classification around leases is also different. So for Topic 842, they decided to stay with a dual approach where they now have financing operating leases, where GASB 87 and SFAS 54 elected to simplify it and just have one classification of lease. Transitions are another difference. So under 842, people had the option to do retrospective or prospective reporting, whereas GASB 87 and SFAS 54 have decided to move forward with prospective. And also the definition of short term. So GASB 87 and Topic 842 elected 12 months as far as what would need to be excluded from capitalization, whereas SFAS 54 has gone with 24 months. Now, one of the other major differences, and something that we just kind of wanted to mention, was the idea of practical expediences that are under Topic 842. So these were done to lessen the burden of an organization that is required to implement Topic 842. And FASB provided packages that contain certain elections or practical expedients. In short, these are really just shortcuts or additional considerations that allow organizations to exclude certain requirements within the standard. GASB and FASAB actually elected a lot of these in their standards, but they put it into the requirements versus having it be an election. And then FASAB also added the exclusion for intergovernmental leases, where agency-to-agency leases between federal agencies will be excluded from the balance sheet, but they are still required to be disclosed. So why are differences important? Well, when implementing these new standards, there's a lot of information that needs to be communicated between the lessee and the lessor. So in some cases, federal agencies might lease parts of buildings or buildings to state and local governments or private entities, or vice versa. So as you're looking forward to implementing your standard, these are some things that you might want to consider, is that your lessee or your lessor might be treating that lease slightly differently under their corresponding standard, depending on what their compliance requirements are. Regardless of the standard that you're going to be implementing, there are some major implementation considerations that are going to have to be looked at in order to make sure that you are successful. And this is really the main topic that we're going to be talking about today. Some of the items that we're going to be touching on are considerations around project leadership, how to look at completeness of your lease population, data abstraction and validation. We know this is a big one because a lot of organizations are finding that their operating leases might not have had the data requirement captured that they thought, or maybe the data quality wasn't quite there. So they're having to do data quality improvements on top of data capture for the new requirements. We're going to talk a little bit about inputs and judgments that are needed to be made in order to have successful implementation, as well as accounting estimates and communication. We know that a lot of organizations, leasing is actually done by program offices, for example, and is certainly not necessarily embedded in the accounting office. So how are those communications around changing of leases and upcoming leases going to be communicated to those who are responsible with reporting? And then conversely, if there's new changes to policy and accounting that needs to be communicated across the organization, how would that communication flow? System considerations are a major component for successful lease implementation. A lot of agencies and organizations are finding that they might have had maybe under 100 capital leases that they were reporting on their prior statements. And now they're finding that they have tens of thousands of leases that need to be reported. So how can those systems be used? Because Excel's just not going to be an option anymore. Are their inventories complete? Can their accounting system do more complex entries like amortization, considerations around changing of interest rates, for example? Other considerations to include would also be new policies, processes, and procedures, as well as updates over internal controls. The best laid out implementation plan can be quickly undone by poor controls, either within the implementation or part of your ongoing process. And then finally, we're going to talk about audit evidence, making sure that we have documentation for our external auditors, as well as some conversations around materiality. We know that this is a very common question and isn't addressed specifically in any of the standards, but we know through GAAP is something that should be reviewed. So we'll talk a little bit about how organizations can tackle those kinds of constructs as we move forward. Donna and Ed are also going to talk about their organizations, how they're addressing some of these issues, and we'll be looking to answer questions and helping you address some concerns as we go. Now, to help gauge the audience status on implementation a bit more for us, we have another poll for you. So for this poll, we're looking to see how far along is your organization in implementing your lease standard. A, we haven't started yet. B, we're in the planning phase. C, we're well underway. D, we're all done, or E, I didn't even know this was happening. Admittedly, I'm glad some of these statistics are changing a little bit. I was a little worried when the poll started and we haven't started yet was so high. So it looks like most of the folks that are on with us today are still in the planning phase of their implementation, which does make some sense in that you're most likely implementing either GASB 87 or SBAS 54. It is good to know that we do have some people who are also well underway as our second polling question. So with the upcoming implementation dates and everything, I'm sure the boards are more than happy to find out that at least people are looking at this and have gotten started or are well underway as opposed to haven't started yet. So with that, I am going to give the mic, if you will, over to Donna. Now, Donna, you're in the process of implementing GASB 87 for the city of Albuquerque. Can you walk us through how the city is addressing that implementation, maybe some items about your status and some of the key implementation items that you'll be looking through for this process?
Sure. Good morning, everyone. Good to be with you this morning. So we have some overall goals for the city of Albuquerque. First was identifying software for lease accounting. When I first started thinking about implementing GASB 87, I was actually working at the New Mexico State Land Office. Much smaller organization, but a huge volume of leases, over 30,000 of them. When we finally went through and see which ones were in scope, we were about 1,200 leases, which is still a big volume of leases. When I was at the State Land Office, we demoed several software packages before choosing a product. At the City of Albuquerque, we use our accounting system, PeopleSoft. We purchased the lease administration module. We have hired a consultant to help us implement the module with the 24 city departments that we have. The other major consideration was budget availability, not only for implementation, but ongoing. So we came up with an estimate of how much we thought a consultant would be to help us implement that lease administration module. Then we try to come up with equitable allocation for the major 5 departments that would be using or have the majority of the leases. At the city, each department receives an appropriation, so the 5 departments had to kick in a percentage of the cost to help with the implementation. Then just for ongoing operation and maintenance costs, we included it in our next fiscal year operating budget, which would be fiscal year 23. Another goal was identifying all the leases. We went through this process also at the State Land Office, we did at the city. We worked with our IT department to create a query that could help capture all the leases. At the city, we started with all transactions under the contractual account numbers. We are right at about 1,000 leases right now. Then we grouped each by city department. Some of the data included in the query was the vendor name, commodity or service description, and expiration date. We also try to think if there's other leases that might not be captured in that query, and the answer was yes, there are. The city clerk has about 3 filing cabinets full of contracts that are not in the accounting system. And I know it's hard to believe we're in 2021 and there are no digital copies of those. They're just paper leases, but it's true. So part of the cost of the implementation is having some staff or hiring some temporary staff to scan all of those contracts in those cabinets. The other staffing need that we had to think of was the 5 departments with those leases, majority of leases, meeting with the fiscal managers and their staff and working with accounting our ERP from IT, and our consultant to validate the leases to be included in the project, and obviously just seeing the whole implementation process through. That will take them some time. Timeline is we had a kickoff meeting with our consultant and the 5 departments 2 weeks ago. So, and we are scheduled to be fully implemented by mid-October. So next slide, please. One back. Okay, thank you. Planning GASB 87 at City of Albuquerque. We started in January of 2020, just meeting with the city departments. Just things like, you know, what is a lease, reviewing the requirements, much like you did, Melissa, and also we also created a training manual so they could have something to refer back to. We provided examples of land, building, equipment. We are currently in the planning phase. I think I mentioned earlier that we have 5 departments with the majority of the leases. Those 5 departments are aviation, solid waste, real property, transit. We included Department of Finance and Administration. That's my department. I'm one of the divisions in there, accounting. We also went over materiality. What we're using is fixed asset threshold that we have is $5,000. And most likely we'll be drafting some sort of a policy or administrative instruction for financial reporting, right, to support what leases we're having that are in scope for this standard. And I think you have one more slide for me. There we go. How are we making sure that we have all the leases? I think I talked about it earlier. First running a query and then meeting individually with those departments, the 5 major departments, to make sure we're capturing everything. And determining which leases are in scope. And I think I talked about drafting a policy that will support what leases we are reporting and which are in scope. Some unexpected items that we have had since January of 2020 when we started this meeting with the departments is the CARES Act funding. We received CARES Act funding, which is good, right? But that just takes time away from the departments and accounting and other divisions within the city. Right? We had a delay in our audit just because we probably all know compliance supplement was delayed, so the audit was delayed, but it delays implementing things like GASB 87. And I talked about we selected a consultant. We had our kickoff meeting a couple of weeks ago. We work closely with ERP and project management in our IT department. Thank you.
Thank you, Donna. As we were going, there's definitely already been a handful of questions that have popped up from the Q&A. So one thing that is, being asked by the audience that I thought maybe you would like to address because it was for GASB is, for the GASB definition of a lease, do copier and postage leases count? I know this has been a big topic around the area. Do you want to go ahead and take the answer to that and how the city of Albuquerque is dealing with those types of items?
That's a really good question. Usually my accounting group, financial reporting, and myself, we try and figure out, okay, what are we including? What are we not? Are we excluding things? Copier leases was one of the things that we talked about. And I believe it's not material. We started trying with, okay, some of these departments have several locations throughout the city. How are we going to capture all of that? And then what we came down to is it's not material for us.
Right. So the overwhelming question is, yes, they are leases if they have those types of contracts, but depending on your organization's materiality, you might be able to kick it off the bus, if you will.
Yes.
I think that's the hope for everybody. Definitely a common question when people start reading the new lease standards, for sure. So thank you, Donna. So as we move forward, Ed, I know you've been very involved with SFAS 54 implementation, and how I'm extremely involved with GSA implementation of the standards. So can you now maybe take a couple minutes to walk us through how GSA is tackling this, especially something, an organization, the size of GSA, and we know that they have a lot of different types of leases and complex leases to consider.
Sure. Yeah, I really appreciate you having me today to talk about this a little bit. So yeah, leasing is very, very significant to GSA. So we, right from the beginning when FASAB was even deliberating, their initial standard, we had presentations to them. We've been big into providing comments on the exposure drafts and subsequently the implementation guidance that they've been developing. And so we, also too quickly briefed our management at, our CFO, senior leaders that deal with the financial management issues. So they had the awareness of what a significant change this was going to be in the financial presentation of GSA, how, the financial reporting would be a significant change coming down the road. While in the federal government, we also have a very significant budgetary perspective that's different, and then that the budgetary treatment is going to stay the same, following more of the old traditional capital lease, operating lease treatment, but now this financial accounting treatment is going to have a big disconnect. So just like some background, GSA is expecting these RTU lease assets we're going to be loading up in liabilities. This could be about a $30 billion increase to our balance sheet. It'll be easily could be the most dominant asset on our balance sheet. From liability, it dwarfs all other liabilities we have. We have very, very small, I shouldn't say very small, but we have much smaller liabilities than what this 30 billion is gonna do to the balance sheet. So we quickly, said, hey, this is so big to us. We already have a lot of systems that capture information on our leases. We have programs dedicated, particularly for the real property area, into the acquisition cycles are unique, capturing all the lease information just to make the regular payment processes and to manage all the financial disclosures that we already have. But we just saw this is going to take us to a whole nother level of the data capture. Clearly, the accounting to get these assets and liabilities on the books and tracked over their lives is very different than how we've been doing it in the past, and we needed automation to support this. Seeing how large and material all this is to us, we really needed automated processes to get us there. We could just tell if we had too much manual, more prone to error practices, that was going to put a risk of problems with the audit, a risk of any kind of misstatement, at much too high of a level that we feel was not acceptable. So we've been driving down the path, working with our teams that operate our accounting system, and we also have a management system that captures a lot of our lease information. So we, in the federal side, GSA uses the CGI Momentum product, and we work very closely with USDA as our financial services provider. So the two teams from USDA and CGI very closely working and going through the SFAS 54 to develop all the system changes that we felt were needed to help us get there. In terms of like magnitude, GSA has about 8,000 real property leases where we're the lessee. We then take all our real property portfolio, which is this 8,000 leases plus over 1,000 buildings that we own, and then we sublet all that to other federal agencies, and that's about 20,000 intergovernmental real property leases. And then we supported that the FASAB deem those to follow the more traditional operating lease approach, which will reduce the complexity, very significantly for all federal agencies who come to GSA, and we are the main real property provider for the executive branch, particularly non-military uses of real property. We also have, a very small amount, but there's, thousands of things like copiers. GSA leases out its owned motor vehicle inventory of about over 150,000 vehicles to federal agencies and some non-federal entities. So again, those will stay on the cleaner operating lease side for other federal agencies, since we do own pretty much in all cases the vehicle inventory. We also have some of our real property we lease out to other non-federal entities. There's only around 600 of those that we'll have to work through all this accounting change and needed some of the automation to help support us there too. So again, these systems, we had our core accounting that we were making changes to, and then our other management systems that capture so much of the information to support payments and for managing our real property portfolio, that we're really having to ramp up and look at the controls around all the data that's being captured that we need for SFS 54 goes beyond just the payment stream requirements to all the extra options that can be in a lease. We see leasing from GSA that we end up renewing options and implementing options in a very high percentage of our leases. So all the information on options is critical to us to be able to compute this total present value of the lease liability and to put these assets on our books. So fortunately, again, I mentioned earlier, it's like we've been capturing leasing information because of footnote disclosures. You have all the OMB requirements on the budgetary side. So we've had a really good, and we feel we have a very good amount of visibility to the leases that are there. So when we were tackling all this, we could come up with some good estimates and kind of really dive into the details of what we'll really have to change in terms of what we already capture, and then additional data we're going to need, and ramping up of internal controls to make sure we're getting all that right. And a whole lot of like mitigating control tests that we'll have to look for anomalies and try to isolate those and be able to be all over them when anything pops up. Couple things that have come up to us, and we look at things like the embedded leases that could be harder to find. They might just look like a regular contract. They might not look like a traditional lease contract. So we know we're going to need to have some testing of contracts to look for some more of that, working with offices where we think there's potentially more opportunity that we're having those kind of contracts, to make sure we're seeing them, make sure we can isolate pieces. It's interesting you mentioned the question a minute ago about copiers and do these get included? And we've had a lot of conversations with, not a lot, we've had a number of conversations with agencies about these copiers. How am I going to separate a fully serviced lease, which effectively you're getting this embedded lease, and a lot of agencies use GSA contracts. We have these big government-wide contracts out there to do lease acquisition, and we'll have their options to buy the equipment or lease the equipment. Do you want it fully serviced? Do you want partially serviced? And you have all the different pricing that then you can use all that information to then determine, well, what's the piece of this that's probably the asset I need to deal with for this new SFS 54. So all of us are actually in agencies and having a lot of conversations about how we target and try to find different components of leases, certainly the embedded ones that are going to be more unique for us and capture all that information. Thank you.
Thank you, Ed. As you were talking, we've had, and this is our current most popular question, and I think it addresses a handful of questions that we've already seen even with the gas fee standards. So I'm going to kind of pose this to you really quick, is in the federal government for leases, capital operating, that are currently on the books, will we have to reevaluate those leases for reporting, or will we continue current reporting until the lease has expired? I think this is probably a really common question when people start learning about the implementation of the standard. So can you kind of walk us through the treatment of our existing leases on the books, and maybe how GSA is tackling some of that reevaluation as of the implementation date?
Sure. Under SS 54, with the FASAB requirements for federal agencies, we do have to have retroactive analysis to revalue any lease with more than 24 months remaining in the lease. And so you don't have to worry about, maybe you have an ongoing lease and it's 10 years old of having to recapture the last 10 years worth of information. All you have to look at is the period from October 1st, 2024, it's FY fiscal year 24, calendar year 23. Any lease that exists that has more than 24 months left in it, we have to compute what's the present value of the whole payment stream, including options that are deemed to be probable that you'll exercise. Again, you don't have to do it. You'll keep like the traditional operating lease treatment for any short-term leases. You will actually have to revisit agencies who do have capital leases today. They, with just 2 years left, in a lease, you'd say, okay, well, now that's operating, you'll have to actually remove some balances, capitalized balances in some instances, to convert all the leases that you have with more than 2 years to the new style, whether it's an operating because of that period, or it's going to be one of the new RTU lease assets. So again, we had so much of this data because we have to disclose that kind of thing. You have to show out year payment requirements and disclosures today. So we can see, we have our big body of the leases captured that we could start saying, okay, what's going to be left in, at the end of 2023, which ones will have less than 2 years I won't have to do this for, what's the big body, and certainly more leases will be added, every month in between now and then. Options exercise between now and then. So that's going to keep tweaking that with managing that continuous change until we get there, and then apply the retroactive implementation for the ones with over 2 years.
Yeah. So the transition's prospective in the idea that we're going to capture all of this changes in the implementation as of the implementation date. We're not going to have to restate prior financial statements. Right. But that also means that anything that is existing that meets the criteria as of that October 1st date is certainly within the capture, right?
Yes,
so
absolutely.
The same cases that we see for Gatsby as well. So just kind of a follow-up to that before we move on to our next poll is, how do you, kind of recommend that people deal with maybe ongoing amendments or modifications that are happening during that transition? Is there an easy way that GSA is using to, kind of capture those renewals, or is it something that you already had within your existing systems that you added as part of that review?
So we do capture any kind of renewal, a new option that's going to impact the payment streams. So we're capturing that in a couple different systems, so that we have that update payments, and we even have unique lease payment modules, recurring service modules in our core accounting system. So we have to know when there's options coming up and that we exercise an option, and now we're going to effectively start paying. The bigger issue is knowing about every option that might be in that lease, so that when we have to actually start doing these computations, that we know we've captured it all, and all the data about options is current. So, a lease might have been awarded 10 years ago. It had all these options. Things have, we have CPI increases over time, or there's been some other mod, like did the option data all get updated when we didn't need it for the current payment? So there's going to be a lot of reassessments and retesting all the data we have in those systems, especially again related to the options, to ensure it actually matches the current existing lease. And we're trying to use a lot of these new technologies that are out there, to potentially using a little bit of artificial intelligence to scan leases, have them find leasing terms, and be able to bump that to the data we have in our systems, and hopefully then start isolating where there's differences and find out what causes those differences. Really trying to use a lot of these tools with robotics and different automation mechanisms that are out there now, and continue to be getting more and more enhanced over the last couple of years, that we can use that in this whole leasing process. When you have huge volumes of data and huge volumes of contracts, we really need to use the automation as much as we can.
Yeah, it's a kind of marriage between AI and accounting these days, and it's been such a hot topic in so many other different areas, and now we're seeing it in leases for sure. Thank you, Ed, for doing some of those follow-ups. So before we go to open Q&A, so we'll be talking, questions, other things around implementation, and hopefully answering some of your more specific questions around the standards. We have one more poll for you all that we kind of wanted to do a touch base before we move into our open Q&A. So for our next poll, and just remember to go down to the polling section and questions under your chat, is in one word, what is the one aspect of implementation that concerns you the most? So when you think about your organization, we know a lot of you are either in the planning phase or well underway. What is something that concerns you the most that maybe we could address as part of our panel moving forward? Let's see what kind of results we get. So I'm seeing audit is a big one, completeness, accuracy, time. It's very time consuming, right? Scope, resource, systems. So Donna and Ed, kind of looking at these results, are any of these, one-word answers surprising you at all when you kind of think about what you've had to do so far in implementation?
It's not surprising at all. I think I told you we had IT help us run a query for all the account codes that are contractual. That's trying to pick up the embedded, just anything, right? It might not say it's a lease, but it is a lease. It's having to go through those almost 1,000 contracts and figuring out what needs to be reported under GASB 87, and then meeting with those departments and working with a consultant. And then going forward, we talked about writing a policy so we can justify what's in scope and what we're reporting. And it's also just ongoing, right? You talked about what if there's an amendment or there's a new lease going forward. How are we going to handle that? So sure, we're thinking about all these things. Audit, sure. Yeah, for the fiscal year 22 audit, we are definitely having that in mind and thinking the timeline for completion of implementation is mid-October. That's well into fiscal year 22 for us. But hopefully, we'll address all of these words here that are coming up on the screen.
Yeah, nothing surprising here, and I can understand the word madness. Oh my, there's so much, and there's so much complexity. If you have a lot of these leases, and the complexity is like, this is really big, and just to know you have staffs of people who understand, like this SPS 54, you really have to study that. And we've done so much paragraph by paragraph. What does that mean to us? What does that look like? And talking to leasing specialists, like, okay, from this acquisition of lease contracts, making sure we're getting to a language where it just gets very accounting, very deep accounting, that you can talk to your acquisition staff and make sure you're relaying those terms into the way they talk about acquisitions, and they have their own terminology. So it's very complex. It takes a lot of communication with different groups who touch leases, and then these embedded things could even be that you didn't even know, you weren't even thinking you have leases in there, and how do we make sure we can find those? Doesn't surprise me. Those words are perfect. We thought them all, I think. I was like, yep.
Yeah, the madness and confusion, you kind of smile, but you feel it, because we just know how significant these changes actually are, and even what it means to, when we talk about organizations the size of GSA, but even small organizations have quite a number of these types of arrangements that can fall under these standards, and in some cases might not have the same level of resources that GSA has to do these implementations. And so it's really being felt so predominantly across our industry as a whole. It's been really interesting that everyone's kind of feeling this together, even though some of the standards are slightly different. So to kind of start our open forum, there's been a lot of, questions that we're getting from the folks that are attending our panel. And one of them that I thought that I would kind of address that I think has been common, and I think we've touched on it a little bit, is, what is really an embedded lease? Kind of thinking about maybe examples that we could provide around the types of service contracts that might have these types of assets in a real world scenario. I know when I'm typically talking to clients, one of my favorite, little examples is your Verizon or Comcast agreement for your internet, right? You've got a service agreement with this organization that's going to pipe in internet to you, and you're renting a modem at the same piece, and that modem technically under the standard is going to be a required reportable lease. Now, obviously, we know in that example, it's not likely to be material, and there's probably other things, but is there kind of an example, and Donna, I'll kick this over to you first, of a type of embedded lease that maybe you have found in your organization that you would be willing to share to give people a better idea of this construct?
Sure. I think I mentioned earlier when we started this process back in January of 20, we created a training manual for the departments, and one of the examples we had in there was an example of an embedded lease. So I'm just going to kind of walk through that. Say if we have some kind of a shuttle service, a little van that carts people between locations. Say the city has some kind of contract with Sandia Shuttle to provide bus service around to different locations in the city. Say Sandia Shuttle has 10 buses that they're dedicating to this contract for the city. The city dictates the routes, the frequency, the hours of operations for the shuttle service. And Sandia Shuttle operates and maintains the buses. This contract contains a lease. I think that's a good example of an embedded lease. We gave other examples just of what could contain an embedded lease, things like service agreements, transportation agreements, sales contracts, possibly IT services, advertising agreements, supply contracts.
Yes, there's definitely a lot of different types of embedded leases that we can have, and trying to pull that asset out in order to capture it for lease testing could be a little bit complex. And I'll kind of throw the same question to you around the embedded lease conversation before we move on to the next item. But one kind of caveat I wanted to add that also came as part of a question that maybe we could talk about in general is, will there be a checklist for some of this stuff? I think a lot of people are looking for maybe flow charts or decision trees. How do I maybe look at a service contract and make that determination on whether, for example, GSA might have control over an asset into one of their service agreements, and how are you making that determination and maybe helping your accounting folks kind of document how to do that testing consistently?
We still have a ways to go from the perspective of developing controls to make sure we're capturing them all. I think we're really trying to get more and more confident that like the terms to look for, or the kinds of contracts that you're predisposed to having this kind of thing. I know there's a number of agencies who do public-private partnerships. I think there's probably a good amount of risk there that there are leases embedded there. There's a lot of cases where people are having facilities operated for this dedicated federal entity, that this entity is really getting the whole use of the asset, and it's all done as part of service fees and sharing responsibilities that aren't looking like a lease on the federal entity's books today, that we need to figure out how to unbundle that and see there really is this identifiable asset that that the entity, the agency, is getting the benefits. They're getting the benefits out of this, and just seeing some of the way we've seen the way GASB has done some of their implementing guidance in the FACEP as well, and what's being drafted there. I see things like the lessor's ability to exchange an asset adds complexity. There's some agencies who lease their IT equipment and they're just really paying a service fee, and they're getting refresh of their IT equipment. Well, you're getting this, you're getting the full use of it for pretty much its expected life. If you're buying computer equipment that way, you're going to have to think about assets like that could be on the books. Even more complex, I get concerned about cloud computing. They're certainly behind the cloud is all these servers on cloud farms and data centers, that if a data center is operated entirely for a particular organization, that's going to be something that you're going to have to look at, and very likely could have embedded leases in it. From a perspective of checklist, there isn't anything that I'm aware of. We just were on a call a week ago with another agency, like how do we get federal entities together to start helping identify, are there checklists of things, are there common approaches to these things? We all are seeing these things instead of having to do it all on our own. Share that kind of information, ways that people are finding, whether it's embedded leases or any other information about the leases, and in ways that might be more efficient, or technologies that we can use even to help find them.
Yeah, no, absolutely. It's such a big lift for organizations, and I think the idea of information sharing as people go through this process is going to be really important, because it's tough to consider everything up front, but when you get a group of people together to discuss it, all of a sudden great ideas can come from lots of different sources. One thing that I wanted to ask, we've got about 4 minutes left, and I just want to make sure I touch base on a couple things, is, Donna and Ed, and Donna, you can maybe respond first for us, is when you started on this journey, and it is a journey, what was one thing that maybe proved to be the most difficult in preparing for this implementation and moving this forward, that maybe you didn't expect up front, that wasn't top of mind when you started this process?
I think I brought this up. I was actually at a state agency, state land office, when we started this, and then it was delayed, right, because of COVID, the implementation date. When I was there, I remember thinking, boy, we just have a lot of time. We have a lot of time, more time than we expected. And then I landed up switching jobs, and I'm now at the city of Albuquerque. And all of that time, it seemed to it went away very quickly. And I'm glad that we got some outside help here with a consultant, working with that many city departments. And I'm bringing up more than one thing because I'm thinking about that, all those words that came up when you did the polling, all of those just keep going through my head. I just, yeah, are we going to be on time? Are we capturing everything? What's our policy going to include, right? The whole checklist, believe me, that's gone through our minds several times. We've even looked at other cities or states, oh, this is really cool. Look, they've even got it on their website or something. So we're going to have to include some sort of a checklist or something in the policy. And I think I brought this up earlier, it's not just implementing GASB 87, it's just all the normal things in the accounting world, right?
Yeah.
Year end, you have CARES Act funding, you have ARPA funding, you may have staff turnover, all of those things.
Yeah, no, that makes a lot of sense. Ed, we have maybe just a minute.
Yeah.
Do you want to take this last question? And I do want to thank both of you so much for lending all of your expertise to the panel. But what was that one thing that caught you off guard that you weren't anticipating when you started this journey?
To me, is that we could have so many different interpretations of the words in the standard. in knowing what it meant and getting agreement on what it meant. Work with our IT folks and what exactly it meant. That tells you a calculation needs to work like this, and having debates on it, and having to go back to the FaceApp staff and having them help us and answer questions in the implementation guide, so that we're interpreting these things consistently across agencies and we understand that wording of it. Because we just had a lot of people, it's like we all read it, we're all, you know, accountants dealing with leasing for a long time, and we came away with different conclusions a lot of times. So that it really showed the complexity of it, that you have to have a lot of this communication, including with your IT folks, like how are you really going to implement this paragraph? It got so detailed that way.
Absolutely. Well, it sounds like, you know, Donna and Ed, both of you are collaborating really well with your organizations. Thank you so much for being on this panel with me today. And I'm sure there'll be a lot of questions coming forward. So for those in the audience that still have questions or want to reach out, I'm sure Ed and Donna will be more than happy to information share with your organizations as well. Thank you very much for letting us talk to you about this topic today.